Hi everyone, it's Sunday. Hope you guys have a good weekend. Last week the market wasn't looking as quick and probably have a lot more volatility than probably anticipated. The earnings season basically, pretty much reached to the end, and especially for some large corporations and retail business and so on, they have already announced their earnings. There are a lot of news that more driven, macroeconomic driven, especially with Fed anticipation whether when it's going to do asset tapering. I'm just trying to get a recap for the market for last week and then tell you what to anticipate or my projection for the coming up weeks and what would be something that would be good to consider as an investor to take the positions. U.S. market futures started at negative as investor mood was showing Chinese economic growth. U.S. stock closed at a record high Monday, turning higher at a weak start. In another sign of slowing growth, the August Empire State Index fell to 18.3 from 43 in July, missing economists' estimate 28.5. Apple hit record high followed by the healthcare, utilities, and consumer staple sector to let S&P 500 higher. Microsoft, MSFT, Facebook, FB, Google, Alphabet, GOGO, Amazon.com, AMZN were also high. Tesla shares fell sharply after U.S. auto safety regulator opened new investigation into the electric vehicle maker's autopilot system, which actually what they did is, a couple of people dying because of that. So that was put for investigation, and I think Chinese also terminology as well. Instead of autopilot, they use a different Chinese terminology to drive that, basically saying is more about artificial intelligence, but not quite fully be automated. What you can translate kind of automatic. That kind of pop more for potential lawsuit. I guess if somebody get crash or dying or injury because of the autopilot. Energy fell more than 1%, dragging the board of the market lower as oil price slump on demand concern bends to sleep with declined treasury yield curve. U.S. retail sales fell in July more than forecast, consistent with a steady shift in spending to services. So now, retail sales, which mean purchases of actual product, they kind of shift the rate into services. The value of the overall retail purchase dropped 1.1% last month for an upwardly revised 0.7% increase in June. Higher prices for things like groceries, meals out, personal care, and apparel risk limiting discretionary spending in the upcoming month. Because of that, the market obviously reacted not very favorably. A report last week from University of Michigan showed buying conditions deteriorated to the lowest since April last year as inflation remained elevated. Results from Home Depot Incorporated, however, also show weaker than expected result. If we get another strong labor market report, I think that I was supportive of announcing in September that we are ready to start the tapering program, the policy maker told CNBC on Tuesday. Home Depot HD fell more than 4% after reporting weaker than expected second quarter comparable store sales that offset quarterly results that beat on both top and bottom line. Walmart, symbol WMT, raised its full year guidance after reporting better than expected second quarter result. Its share ended flat. U.S. crude decreased by about 1.16 million barrels for the week ended August 13. China, the world's largest energy consumer, reported daily crude processing in July fell to its lowest level in nearly 15 months. Media giant Viacom, symbol VIAC, also trade higher among S&P 500 stock, up more than 4% after Wells Fargo upgraded stock to oversight with a price tag of $60. If you remember, Viacom, which is driven by the Korean fund manager, have actually sell off because they probably do too much precision and kind of lavish too much. So the price was crashed to as low as $40 a share. So now you're going to revise the target $60. So could be something to watch for, and maybe it's still worth to hold, for a longer range to put it back from $40 to back to $60 or $80 positions. And also, if you hear my video last week, they talk about Walmart, Home Depot. So as expected, Home Depot kind of a little slower because of the home improvement project. in summertime or wherever that kind of older people start returning back to work. Walmart, however, it seems to be the online business doing pretty well, so they continue to grow and revising the forecasting for the year. U.S. stock closed low on Wednesday after Fed July meeting minute revealed general consensus that the central bank should begin tabling its monthly bond purchase by yen. Obviously, that driving the market to pretty bad and poorly on Wednesday. And Thursday is actually the market kind of mixed. So you see the relativity and between Dow Jones Industrial Average and more Nasdaq in particular, because of the yield curve and the tapering announcement driving Nasdaq was down, but then it got rebounding on Friday. So Friday rebounded from previous day low. Apple, APL, all 11 of the S&P 500 set again ground, topped up by Information Technology Group, which is Google, Facebook, and Microsoft, and higher with the later ending more than 2% higher. Foot Locker symbol FY second quarter result that beat Wall Street's estimate on both top and bottom line, sending share more than 7% higher. Deere & Company symbol DE fell 2% as its better than expected result were offset by worry that supply chain issues of raising input costs will continue next year. In other news, Nevada NVDA, which actually looks like has split, so get down to $200 after that, and it will have a driving pressure to $190 down to for the week, riding more than 5% after disclosure that House Speaker Nancy Pelosi had bought stock and call option chipmaker, and now it's actually went back over $200 again at the end of Friday. Stock were toppled lower during the week after minute release from Federal Reserve July meeting indicate that policymaker may this year begin reducing emergency asset purchase, which somebody anticipated will be starting in September. I'm not sure about that yet. China's bigger tech stock continued to tumble after the country's top legislation passed a data protection law. Again, I see that actually positive, even though whatever the news tell you. I mean, US should do the same, all right? What I mean by that is it's not a screen provide your box to tech to continue when you're trying to use this free application that collecting your data, but also oversight the purpose of why they're collecting data and stop from selling to other entity or show advertisement something the user don't want. Pretty much that is how some of these big giant high-tech US companies make money. And I think, China basically saying this is a privacy protection law, which is, if we're talking about human right, that's part of it. And so they respect in that. I don't know what the faction really is for the law to be implemented, enforced, and how to work. But at the end of the day, you really send a clear signal to all these companies that, hey, despite technology is really great, I mean, you really cannot collect everybody information data, and it could be for good for bad. So that's really need to have a consensus of somebody who actually using it. And in my opinion, sometimes you don't have a choice because they argue there's no free lunch. So if you want like WhatsApp as an example, they do share and take your data that being used. So you don't have a choice, right? Because if you don't agree, you cannot use WhatsApp. So while you're saying the regulation, all this stuff in America too, I still think the magnitude of controlling and monitoring and oversight is not enough because it doesn't really give consumer a choice, because the argument is you either use it or not use it, because if you don't agree with it, then you can't use the app. Well, does that make any sense? Sometimes I don't, because if your friends or your friends using WhatsApp, you need to talk to them, but you don't want to share data. What are your choices, right? If Apple going to take all your information, your iPhone, anything you do, I mean, they do really quick statistics saying how many minutes you spend on social media, how many minutes you spend on emails. Well, do you really need that data? Why are they really giving this type of statistic to you? As a user, you don't care, but they use this information and have a way to know what they want to sell onto you, what screen to show up on your iPhone while you're watching news and so on. So, I mean, certain things, you just have to, in my opinion, you need to be waive the benefit or cost to people, right? And it is what it is today, right? Because it's big data. They talk about big data can do a lot of things, very powerful. But if you're on the wrong hand, it could actually create a lot of damage for you. Like an example I used in last video, if you heard about it, is you apply for jobs. A lot of people mailing out more jobs. They apply for jobs. You have to bind to the agreement. Well, part of the agreement, what they do, they sell your data, their phone number, their name, their address to the advertising company. Well, can Can they really doing that? My answer is no, they shouldn't, because they are a company that say, yeah, there's a job for you to apply to get a job. So in my opinion, that is a scam. But U.S. government doesn't do much about those companies, so I just don't understand that myself. U.S. stock stage big comeback, but still ended the week low on recovery fees and Fed tapering. Bitcoin rebound ended $49,000 a while ago, remained below 1,800. Oil dropped sharply to 61.80. So like I said, if you hear the video, I said oil stock, you probably have to sell. So you definitely want to consider that if there's a rebound this following week, because while the driving season is over, if you look at historically, that's always the case. While some of the misses was attributed to weather-related issues, COVID outbreak and containment measures are going to take a toll as well, creating problems not just for China, but trading partners as well. Craig Yuen, senior market analyst at Anando, said in a note, more supply issue and bottleneck and likely if these measures don't resolve the issue quickly. But what is unfazed by the recent regulatory crackdown in Beijing, with the investment giant recommending investors triple their allocation of Chinese assets, according to the FT report. Well, just like me, I'm telling you, buy the Chinese stock at a dip. Of course, there's something that you have to be cautious of and something to consider about. But there's certain company, they really making profit. They are one of those driving forces for Chinese economy. So I still believe that they are good to own. And right now you may see them every day. Look at news, and another 5% tumble of Chinese stock, another 10% tumble of Chinese stock, more regulation from China and whatever. Yeah, all about perception, how you see that, whether it's it's a loss to you, or it's actually the opportunity for you in terms of investing, in terms of, how well they do in the future, where you'll be able to make profit of it. If you look at the chart for S&P 500, just plot a 50-day moving average in the chart, you have a perfect indication of where buyers have come in and bought on literally every major dip in 2021. David Keller, Chief Market Strategist at StockCharts.com, told Insider on Friday. The markets have volatility for a week and is primarily driven by news and views in economic recovery. As I've spoken previously, if the market has dropped 3 days consecutively, we may be in some correction, but this week you see it was a mix and it was down and then pulled back up again. So at this point wasn't too much conservative correction, but maybe the upcoming weeks before you hit the mid-September again, where the window dressing again for the funds. Investors need to be very careful about entering the market at this point. So again, the dip is everybody have a different preference. You gotta look at what your buying points is, why you're buying certain stock, right? If Chinese stock fell for another 10%, would be a good opportunity for you. Well, I keep buying Chinese stock, but it keep going down. But again, I need to average it out statistically. So when you rebound, I will get the 20-30% return that I always share with you guys, right? I bought a little NVDIA as well because the shortage of chips will possibly remain for the rest of the year. So the outlook was good, and the stock already rebound over $200 after the dip. So after the split in this period on this week, increase of Delta costs continue to drive leisure and the stock to be down, which is CCL, NCLH, but I think, when U.S. and the rest of the world increase vaccination, lift further travel restrictions, which particularly, when you're looking down now Thanksgiving, Christmas time, people still want to travel, and business travel maybe start to resume when companies hire more people back to the workforce. So the profitability on these will come back. I'm still advocating on those stocks that have previously been provided you Bowling. I mean, Bowling have been dropping this week. So again, it would be a good opportunity to buy more. Disney, 3M, CCL, NCLH, Trip, Chinese stock will be Pinduoduo, PDD, Tencent, YY, and then the technology space will be AI, Apple, and then the vaccine side will be Pfizer, and maybe on the energy space will be Blink, BLNK. And then EV stocks such as XPEV and BYDDF, I will wait a little bit before jumping back in. So remember, I told people to walk around $47. Maybe you're not the lucky, maybe 42, let's say that before the IPO of XPEV. You can see the price now $37 now. So you still have a way to go. You could be going down to 35 or lower, which probably I would say around 33, maybe a first touching point to buy some XPEV. Starbucks may be good as well if we spot back below 100 to 107 range, where currently is over $110. And one item worth sharing in this video in particular as well as an email that probably you'll get it from your brokers about the OTC regulation change. This is related to a new amendment to Rule 15C2-11 under the Securities Exchange Act of 1934. Some firms before end of this August, they will not allow you to buy any more OTC security, any new ones. So you can have the existing one you're wearing in the portfolio, but not buy any new. OTC securities you hold are currently categorized as a pink no information, gray market, or expert market security. These are the ones that probably will be impacted. My understanding that the brokerage firm will also no longer provide the bid and ask code, making the shares more difficult to liquidate. So you probably know what really this rule is targeting to. I'm not going to talk about it here, and the media always again keep talking about Chinese stock and Chinese government regulation. So but this new amendment also impacting you, but is not driven by Chinese government, but by the US SEC. So just to get some idea, like Bitcoin, for example, trying to create regulations, SEC. So sometime while we're keep saying Chinese government is dictatorship, well, what happened to U.S. government? Do we have a voice? Do we have a vote to tell them this doesn't make any sense? Why suddenly controlling this pink information stuff? So I'm suspecting that is also why Chinese stock have been selling off. Because again, I'm not gonna say it very clear out loud here, but you should be able to read the context and know what happened. If you have been following my video, you know that I've advised that the market may drive correction around September and never given expectation high yield curve, which is not yet the case yet. So if the curve suddenly will flip, which can turn quickly for whatever odd reasons, you could actually do put in NASDAQ. Probably that will be the recommendation on the index. Quite honestly, Fed asset tapering should not be surprising. China policy-related piracy law and also monopolistic business, which is the one too big to fail, are not surprising either. It will take some time for those to be transitioning, and then will be good for long-run economic growth. Every month and a half, you saw also V-shape if you put Dow Jones Industrial Average and S&P 500 index, just like the one I told you. You just run it yourself and take a look at that. Therefore, if the market slip over next 2 weeks, it's not surprising. It may come back in for another record high in probably after mid-September. So, given that Biden still talking about 1 trillion, I mean, he keep talking about it, but then no money at this point has been spent on market yet. So the 1 trillion, 3.5 trillion infrastructure plan and more worldwide vaccination will leading to a lower cases, because right now you hear a lot of news every day talking about how many people dying, how many people get that, and then the alert or whatever. So I mean they Wall just giving you all this bad news right now to drive the market, trying to justify why the market is going down, right? So as an investor, you really need to be smart and look at what is the truth, what is going on, how my portfolio look. Am I supposed to take a profit, taking a walk on some of these? Which stock will I buy if I have some excess cash, right? Of course, there are risks with U.S. and China tension, Middle East political instability, which what you read on the news last week. Corporate tax increase and increase of yield curve will also offset those favorable factors of this excess cash, but may drive the market lower. But for the long run, however, I'm still recommending to buy stock with profits. Remember, you don't want to be in the high tech space or wherever you're looking at. You don't want to buy the stock with just the growth, right, which you're not making money. So you do want to make sure you stack up very well with your portfolio, okay? And the Chinese stock is I will call diversification. I do that for diversification, and they will really beat up really bad at the moment. So I think it's really have a value for some of the stock I recommend that they actually have a profit. And Pinduoduo still at a loss, just FYI, but they are actually doing the grocery online very well right now. The business is definitely growing. And I'll probably start to do some stock valuation and share with you on my other video. I mean, it would not surprise to me that you start to hear about this term again very soon. If not the next 2 weeks, maybe in September, especially if Fed maybe start tapering, then people, will say, hey, the market is overvalued, or the stocks are overvalued, right? Well, you hear the overvalued already last year. So now the question is the resilience, Apple, all these FANG stock, and some other stock keep making more and more profit, right? Record high profits. So are they really overvalued, right? So you need to do the stock valuation and kind of evaluate those. Maybe they're not, right? I mean, so then it's good to hold and looking for any new thing, like Apple still trying to build the Apple Car, iPhone 13 coming up. The iPad sales still pretty strong and solid. So all these are actually favorable to Apple stock, right? I'm not telling you to buy the Apple stock right now, but I'm just giving you. You need to have some factors, your micro factors as well as the macroeconomic factors, trying to price into things and ask yourself, what would something if you have an extra $10,000, for example, where you will put the money to, right? So I am recommending the stock that already get beat up very quickly, a lot, but if the market is down and correction is going to happen, as the way I told you, you could down another 10%, but it's only 10% compared to other stock, which potentially could down 20%, 25%, right? So anyway, I hope you enjoyed the video. Have a nice and wonderful weekend. Send me an email if you have any questions.